Hey, Bernardo Wealth Extended Family. Obviously, the markets are very uncertain right now with the tariff and new policy and kind of this trade war that seems to be getting bigger and bigger every day. Wanted to cut through that and really start to focus back on what we've talked about. We've planned for this. And what does that really mean? How do we break it down so that when you're looking at your online values, et cetera, that are obviously coming down if you're invested in the market, how do we put that in perspective and know that we have planned for scenarios like this? These scenarios are going to happen, and we're going to be just fine when we come out the other end of them because we've planned and we've built our cash flow and we built buckets of liquidity to get us through these periods. So you see, I'm sharing my screen. This is pretty simple. We call it our waterfall cash flow. So through planning, we think about a short-term bucket of cash and cash flow, and that's basically kind of your 6 months of expenses, your needs, and your wants to the household. Then we think of an intermediate term bucket, 6 months to 3 years, right? Depending on the life cycle. If you're younger, it's probably 6 months. If you're retired, it's probably 3 years, maybe even more than 3 years worth of your monthly spend, right? So those dollars are allocated into that bucket. And you can see the biggest bucket is long term, 3+ year time horizon for growth, right? Obviously, we're not tying that to any short term expenses. We're saying that's the bucket should grow. There's your stock market dollars, right? Longer term out 3+ years. And our mentality is we're really not looking to touch that portfolio inside of a 3-year cycle. And so this little graphic can kind of show you that, all right, we fill these buckets up, and then what happens when the stock market goes down by 10%? Well, you can see the long term was affected, obviously, right? But the part that I think I want to help you to understand and hopefully bring comfort to is we've got 6 months worth of standby cash. Okay, so we're good for 6 months. We don't have to touch this long-term bucket for 6 months, right? Then behind that, we've got 6 months to 3 years, maybe even more if you're retired, of intermediate term, and that's your bond allocation. Right now, bonds are actually moving up in value with interest rates coming lower. So foreseeably or theoretically, that bucket is actually growing in the midst of the volatility in the stock market. So we've added another potential 3 years to it. So ultimately, we've got 3 years of runway before we ever think about getting to our longer term stock market bucket. And then what that should say to you is, well, we're okay. We can weather through this. We've got 3.5+ years of cash flow that will help us from ever touching our longer term stock investments. So yes, it's uncomfortable. Yes, the market's going to, kind of frustrate us all and that way. But ultimately, I think this is what you should come back to and understand that we've planned for this. We're in front of it. And this is the methodology that we think about internally when we build your portfolio. So I hope this is helpful, to you. We'll continue to be in touch on the markets and kind of strategy like this that I hope helps you feel just a little more comfortable amid the uncertain time here. So as always, reach out. We're here. These are the times we need to be, kind of in front of you and talking the most. So please don't hesitate to make a call. It's our biggest goal for you to feel as comfortable as possible through an uncomfortable time. So thanks for your time today, and we'll talk to you soon. Take care.